We've got Charlene Webster. Hello, Charlene. Clarissa from Aon. Oh, we've got a good attendance today. That's great. It's great news. Hopefully we can break the record, guys. I think our record, and I stand to be corrected, Tove, but I think our record is just over 300, correct?
Yes, and I think everybody will be happy to know that we've upgraded our subscription, so now we can admit up to 500. So please keep coming.
Oh, fantastic.
Yeah.
Fantastic. I would ask if you're not presenting or introducing yourself, I'd just ask you to turn your cameras off and mute yourself. If you'd like to pop on and say hello quickly, that would be great. Just while we're waiting for everyone to log in. We've got Dave Wedderburn from Seller, Dawn Harvey from Appio.
Morning, everybody. Hi, Rob.
Hello, Gordon.
Morning, Gordon.
Got Gordon joining us all the way from the UK. Gordon, what's the weather like there?
All the way from London. It's cool, but the sun is out. So that's bound to change in the next hour.
Wonderful, wonderful. And have we got any test cricket to look forward to this weekend, Gordon?
No, the test matches are over, but I think there's the mighty Ireland against England one days to look forward to.
Ah, fantastic.
But, you know, you've got to take what you can get. Enjoy.
Cool.
Thanks, Gordon.
Can I just ask everybody, if you haven't registered using the link that we sent on the invite, please do register. It just makes getting your CPD certificate to you very easy. So if you haven't registered using the link that is on the invite, which was sent prior to this meeting, please do register. Rob, I think we can give it another minute and we can start.
Perfect. Just to reiterate what Tove has mentioned, it becomes very difficult to sort of track people's CPD points and certificates when it's just a name that pops up. We need your ID numbers and email addresses in order to distribute those things. So please do make an effort. You don't have to do it now. You can do it after the session, but I think it's really important to go and register. And if you're having any issues, send myself or Tove or Tammy an email, and or any of your consultants an email, and we will make sure that you record it properly. Right, I think we should maybe get started. What do you think, Toves?
Happy when you are. Is Chris still around? Sorry, good morning.
Morning, Rob. It's Riette from Marcia. I see Billy and Roger are stranded on the same island in the middle of the Caribbean. I'm very envious.
Yeah, me too, Riette. Thank you very much for joining us. Right.
Okay, Chris, are we ready?
Yes, I think so. Can you see the screen?
Yes, but we can't see you.
We can't see you.
That might be a problem. I don't even want to go off the screen. So Brett, yes. Maybe you can start with it.
Great. I'll do that, Chris. Yeah. Do you want to start the slideshow and then we can get going?
Hello?
Mr. White, we need to talk.
Who is this? The name's Bond. James Bond.
Well, good morning, everyone. Thank you for joining us. I see there are 308 participants. It's about double the size of my wedding, so I can't wait to hear myself speak. Chris and I are going to run through our product today, perhaps one of the simplest products in the market, and something that excites us because we think it's a product that will lead to a lot of uptake in the next few months, and hopefully a product that each of you will be using or presenting to your clients in the future if you haven't already done so. I'm coming to you down from Cape Town. I run the Cape Town Court Bonds office. You'll see that we're down as Hollard Court Bonds, but we, for all intents and purposes, are part of the iTOO family and come to you as iTOO. Chris, if you can go on to the first slide for me. I think it's safe to say that we're facing unprecedented times globally. We've seen a pandemic that no one would have foreseen coming, and I think the effects of it have been far bigger than any of us could ever have imagined. I think the uncertainty that's come from it is also significant, and it means that we are facing something that we've never seen before, and none of us know when this is actually going to end. So we have to use these sort of opportunities to our advantage, and trying to use these times of crisis to actually see where we can, excuse me, enhance our businesses and how we can make up for some of what we've lost over time. Global growth has been projected to decrease by 4.9% in 2020. We're seeing that these figures are increasing almost on a monthly basis as the pandemic continues. We've seen that 83% of South African consumers have been negatively affected by COVID and the lockdown in South Africa. I think there's been a lot of uncertainty as to when things are going to lift and how governments are going to play things out, and that's made it even more difficult for us. And worst of all, we've seen the knock-on effect of unemployment increasing to unprecedented numbers. At the moment, we're sitting at over 30%, and depending on which commentators you listen to, people are saying this could be far worse than initially expected. So Chris and I hopefully are able to introduce you to a couple of products that can help you through this time, a couple of products you can introduce to your clients that are probably already on your books, and that can at least produce a bit of income for you during this COVID time. There's a slide up now on Bloomberg, or from Bloomberg, that shows that South Africa was actually going into a recession prior to COVID hitting. And I think that has shown us just how hectic things can be in South Africa. It's not like we were thriving as an economy leading up to this, but it's a time for us all to band together and try and find out how to mitigate our losses and actually make this market work for us. You can see that slide just shows us the 30.1% unemployment that we've got at the moment, and that number is increasing, unfortunately, on a daily basis. Every crisis, there's huge opportunity, and I think this is a time where we can use that. Insurance is generally seen as a grudge purchase within the market. As we know, most clients are looking to cut premiums where they can. They're seriously considering what cover is actually necessary in their lives. Some have been disappointed by the insurance market and are questioning what they need and what they will actually be covered for. A huge amount of pressure on people's pockets, on both businesses and individuals. And worst of all, we're seeing the payment relaxations from banks and others coming to an end, and that pressure is only going to continue and increase. So if we look at our court bond product, we'll run through the different types of court bonds for you, and I'll show you it's not all the doom and gloom of the liquidation side of things. But the court bond product is one of the simplest products in the market. It's a bond of security, which is a financial guarantee given in favor of the Master of the High Court. The product itself is dictated by the Master of the High Court, so the wording and the rates are both set by the Master, which makes it quite easy for brokers and ourselves and for clients to understand. And it's a financial guarantee that gets given to the Master in case a practitioner causes loss to an estate. It covers a number of different types of practitioners. So we offer four main types of bonds of security. The one is executor bonds. It's obviously for deceased estates. So generally you'll see when a person writes their will, clause 2 says, I hereby exempt myself from placing security with the Master. And someone who does it won't have to put security up for the Master, but you'll be surprised at how many people in South Africa die intestate without a bond, and how often these bonds actually are required. The second is curator bonds, so that we'll run through in more detail, but basically that's for other incapacitated persons. So you're looking at generally older people with dementia or someone involved in an accident who doesn't have their mental faculties about them, or we look at asset forfeiture unit bonds, which we'll go into more detail on just now. Then there's trustee bonds. Those are generally special trusts set up for the proceeds of either a medical negligence payout or medical malpractice payout, or for an accident fund payout. The Master and the courts are more often insisting that a bond of security is placed with the Master in case the practitioners who are now in control of huge amounts of money often run off with part of that money. And then lastly, the liquidation bonds. It's a type of bond that's been in the market since liquidation bonds were introduced in 1936 in terms of the Insolvency Act. And each and every liquidation and sequestration that takes place in South Africa requires a bond in order for that practitioner to take up their appointment. So we move on to the first type of bonds. Benjamin Franklin said that the two certainties in life, death and taxes. We know that tax evasion is huge in South Africa, so he certainly didn't make that statement in a South African context. But as we know, death is the ultimate certainty for all of us. And the numbers in South Africa are about 500,000 deaths per year on average. As I intimated earlier, not all of these or a high percentage of these won't require a bond of security, but there is also a huge number of these matters that do. So these bonds are required either where someone dies intestate, so without a will, and the Master calls for security, or where the person has exempted the executor from placing security with the Master, but for some reason that executor isn't able to take up the position of executor, either because they've left South Africa or they've predeceased the deceased, or they choose not to take up their position, and the Master is then forced to appoint someone else to wind up the estate. In those cases, they'll require a bond of security, and the Master will call for that. Traditionally in South Africa, deceased estates have always been run by attorneys. That's changing at the moment, so it changed to now allow accountants, attorneys, and fiduciary practitioners to wind up estates. And the Master's busy changing or reforming the law to enable any financial advisor or fiduciary practitioner to be included in this as well. So we foresee that the number of people needing these bonds will increase significantly over the next couple of years. The Law Society, who provides attorneys, has also had to clamp down a bit on the amount of capacity that they're giving out. What happened historically is that attorneys got these bonds free of charge, and they used to have a cumulative amount of 20 million per year that they could get from the Law Society. What then happened is, because they weren't paying for it, a lot of them neglected to report back to the Law Society once they'd wound up estates, and the Law Society ended up with a huge accumulation of risk on their books. With capital-based solvency, they had to put up capital behind these bonds, and a lot of these bonds related to matters that had long since been wound up. So they've clamped down significantly to make sure that the overall cumulative number is now sitting at 20 million, which means that any law firm can only take out 20 million rands worth of bonds, and until they've got filing slip and releases from the master on those that they have in place, they're not able to take out any further matters. So we've seen quite an uptake on those within the market, and a lot of those are attorneys who will be your general clients who didn't even know were taking out these bonds. Moving on to the next slide. The executor's duties are pretty obvious. They're generally what's either set out in the will or set out by the laws of succession. And basically what it says is that they wind up an estate by calling in all debts due to the estate, valuing and distributing all assets that make up part of that estate, and then ensuring that all administration costs, which include our costs and the costs of winding up the estate, are covered before distributions are made to beneficiaries. It's generally quite a straightforward process, but it is being complicated by different classes of assets which they're having to wind up. So it can be shares within the financial market. It can now be cryptocurrency that's owned by the deceased or was owned by the deceased. And then, of course, their general immovable and movable assets. There are not many claims historically on these matters, but there is actually quite a steep and significant duty which sits with the executor as a fiduciary practitioner. Moving on to trustee bonds. As I said earlier, these are the two main sort of sources of trustee bonds are road accident fund payouts and medical malpractice payouts. Often these road accident fund payouts are in favor either of a minor or a person who hasn't dealt with huge amounts of money previously, and the court then decides that they would like to appoint a trustee rather than making a once-off payment out to such a party, or actually by someone who's been incapacitated by the accident. So we're looking at both trust companies and attorneys who usually are appointed as trustee of these trusts, and they increasingly require bonds of security for the master. There used to be an exemption that you could apply for when the trust was formed, and the courts were keen to give that exemption because they didn't want additional expenses for the trust. They wanted that money to go directly to the beneficiaries. But what happened was there's been quite a lot of collusion between attorneys, advocates, policemen, medical practitioners, etc. And the master eventually sat with a 700 million rand deficit in, this was just in Umtata, where those parties had actually taken that money and run off with it, either through fictitious trusts that they'd made up or through legitimate trusts where they'd simply overplayed their hands and taken excess fees. I also know society and involved in the ethics committee, ran off with hundreds of millions and is now sitting in Australia, sort of trying to avoid our law enforcement. So I think over time the masters become more aware of the need for these bonds, where there hadn't been many claims historically. Suddenly they're sitting with liability, where they actually sitting as the chief custodian of all these assets in these different estates, and now finally see the need for the product. Banks generally are the ones who have traditionally taken up these trustee positions, but we're seeing more and more smaller trust companies come in. They've got a bit more flexibility and autonomy when it comes to the investment of the funds. That's a sort of double-edged sword, where they're in possession of huge amounts of money and can decide where where that goes. There generally should be strict rules for investment, but we have seen some matters where they're going for sort of higher risk investment, or actually misappropriating funds that has led to claims on these bonds. Then medical malpractice payouts haven't generally been a big thing in South Africa up until probably 2 years ago. We've slowly cracked the US market where you can literally get paid out for next to nothing. We've seen payouts in a far more litigious and acrimonious legal system. And that's slowly filtered down to South Africa, where we're seeing payouts of anything between 5 and 25 million for medical malpractice. These payouts are also covering minors who are only claiming at the age of majority and still have the rest of their lives to live out. And so the payments can be quite significant because the courts look at what their loss of earnings would have been over the duration of their lives, and then make a single payout to a trust where a trustee is now administering those funds. So we're looking at decent amounts of money coming in. The beauty of these products for brokers is that, particularly on the trust type products, they run for years and years. So you'll literally write a trust in 2020, and that trust could run till 2040, renew year in and year out. The premium payment's an annual one. So as a broker, you'll be earning premium every single year on a trust that you've written without having to do anything or administer anything. The next type of bond, Chris is going to cover and run through with us. Chris, if you go down to the next slide, I can make everyone feel slightly nauseous. This is the takealot.com bond, but Chris can give you more detail on it.
Thanks, Brett. Yeah, so the next type of bond is a curator bond, and probably very topical at the moment with those famous three faces on the slide. There's two types of curator bonds. The one is to do with incapacitated persons' estates, people that can't look after their own finances. Curator will be appointed to look after their finances. The second type is a curator bond in terms of the Prevention of Organised Crime Act. And that is a lot to do with state capture at the moment. Somebody has enriched themselves illegally, and the asset forfeiting unit will go to court, and they will appoint a curator to look after the funds that was gained illegally until such time as the courts decide to forfeit the money to the state. A very interesting one, Brett did a bond quite recently of 1.6 billion rand. That was the Trillian and Mackenzie matter. It ran for 8 months, and the broker on that specific bond after 8 months got around 2 million worth of commission. So we are expecting quite a lot of action in terms of insurance in this area. About a year ago, some of the curators that's on the AFU panel told us that they believe there is 10 bonds out there in the market of 10 billion each. So 10 estates of 10 billion each, which is a huge amount of money, and probably that there's not enough capacity in South Africa with all the insurers coming together to cover that bond. The next type is liquidation bonds, and obviously this is very topical at the moment. A lot of companies going into liquidation and not making it through this COVID situation. Every single liquidator that's appointed on a estate requires a bond of security. Every single liquidator or trustee that's appointed on an insolvent estate requires a bond of security. we have seen the list of liquidations from the master increasing daily in this last 3 months. It was quite quiet before COVID, and it's suddenly just spiked. And there's a huge amount of business out there in terms of liquidation bonds. Which is two interesting graphs that you can see on the screen, is people believe the South African economy has been doing very badly. But if you look at insolvency and liquidations, over the last couple of years, it's actually done quite well. There's a decrease in the number of estates going insolvent, being liquidated. There's two factors to that. One, that the banks extended credit to people. And then the second one is that people or companies went into business rescue, and this delayed the process of companies going into liquidation. But we do see a huge increase in liquidations over the next couple of months. What is also it's not good, but it's good for the product, is that liquidations is counter-cyclical. So when the economy is doing well, this product is down. But when the economy is doing really badly, there's a huge increase in insurance on the liquidation side. Brett referred to it slightly earlier about the simplicity of this product. For all the court bonds, that's trustee, executor, curator, and liquidation, this is the policy wording. It's a one-page of policy wording. It's set by the master of the High Court, and it's standard in the market. It's been standard from the early 80s. And over to Brett. Brett, you might be on mute. Okay, I'll continue. Challenges in this specific market. The market has been dominated by two players. In the past, these players have told brokers that it's a very complex product. They don't know what they're doing. They could be held liable. And that, we want to tell you, it's the furthest from the truth. It's a very simple product. There's very little advice given by an insurance broker to their clients. And there's really no comparison to do. The master sets the rates. It's standard rates. The master sets the wording. So you don't give any advice. It's a very simple product. Another challenge in this market is that for somebody entering, there's a huge delay in premiums payable. So the practitioner will only have to sell some of the assets before they can pay your insurance premium. And that causes a delay. And then also a general lack of knowledge about this product. The belief that it's difficult, the belief that the brokers don't know about the product, don't know how to advise their clients, leads to a very few brokers playing in this market.
Thanks, Chris. I managed to unmute myself. Sorry, that was my biggest challenge. So, yeah, as Chris said, you will not find a simpler product in the market. That wording that we put up earlier is literally the entire wording for the bond of security. It has 4 bits of information that go into it. It's the name of the practitioner, the master's office that's dealing with the matter, and then the value of the bond is repeated twice. And literally that is it. It's dated and signed and it sits with the master. So this is a product where, as Chris has said, the word in the market has been that it's quite a complex product to handle. We assure you that not only are we there to sort of hold your hand throughout the process and and to help you write it with your clients, but it's something that really can be understood very easily by both broker and client. And once in place can be sort of money for jam if you've already got clients in your books that are writing them. Claims is the next slide, and it's one that we almost don't need to cover because there have been so few claims in the market historically. But the worry with these bonds is that it's not about the individual claims on bonds that have been the problem. It's been about the accumulation of claims. So we talk about the severity rather than the frequency. And what's happened traditionally where there have been claims is that you've had one practitioner who's dipped his fingers into the till in one of the estates and then used the second estate to bail himself out and sort of rolled it from estate to estate until it's become overwhelming and he's too deep in it, and then suddenly you'll have 30 bonds called up or 50 bonds called up, and that can run into large amounts. Historically, there have been very few individual bonds where it's been a once-off, where there's been a claim, but that's where we come in on the underwriting side to see what the practitioner's history is, whether they've got the capabilities, whether we can perhaps help them or point them in the right direction if they don't, and basically you're looking to find clients of integrity that you write these bonds for, rather than absolute experts necessarily. For someone who is wanting to administer an estate, they'll always be able to find the advice that they need, and while the master's office can be quite challenging to deal with, you don't generally find misappropriation taking place unless it's an out-and-out thief. With the bigger trust companies as well, they've got a hang of a lot to lose if they are thrown off the master's panel or not able to take future appointments. So the few claims that we have seen in the markets have literally been where someone has ducked the country and no longer has a business in South Africa. So they're few and far between, but there is severity when they do come through. When the master claims on a bond, there is 30 days in which we're given to investigate it. That can even be extended, and money often will sit in either an attorney's trust account or with the government fund while that matter is investigated. But that all takes place on our side as insurer, obviously. In terms of settlement and recoveries, if a practitioner runs off with cash, we've obviously got the right of recourse against them. So these bonds are meant to be demand bonds where the master calls it up and we then pay the money across, and we then investigate and find whether we can recover some of the money or whether it's an entire write-off. Usually, unfortunately, it is, and when it's taken, it's taken. But as you can imagine, the nature of these estates is often that there's immovable property involved, there's movable property, these estates are being wound up on different timelines. So you'll have a practitioner with 50 different estates that he's running, but with one of them, it's very close to being wound up, or another one he's only just getting going on. And so that mitigates the risk further. So the overall accumulation of risk is often far lower than the factual figure that we're dealing with. Then moving on from the bonds, having been in this industry for a couple of years and providing the bonds, we saw that there was a need for insurance within estates. Originally, it started out with liquidation estates, where liquidators struggle to find capacity within the market. I think liquidations generally have been tainted and people just saw it as horrific risk and something that no insurers want to get into. And we were able to provide those liquidators with a solution. A lot of the time, you're actually dealing with static risk where factories being closed down and the risk that appears at face value actually is no longer there, but there are many challenges for practitioners, the least of which is that the greatest of which is generally that they don't have cash at hand at the inception of a matter. You'll also find that with liquidation estates, the very first thing that they stop paying when they started struggling financially as a company was the insurance, and that there often hasn't been insurance in place for a few months leading up to liquidation. With deceased estates, it's similar. Accounts are frozen and a debit order bounces, and next thing the executor finds out that actually there's no insurance in place, and suddenly he's scrambling to place insurance on that estate because he's obviously got a fiduciary duty towards the estate. So what we've done is we've tailored different wordings that are appropriate to the different types of estates. So with a liquidation wording, it states that when the practitioner, so when the liquidator is in possession of funds, they immediately pay the premium at that point. With our deceased estate wording, it gives a 3-month grace period on the first premium, which allows the executor to get their letters of executorship, to open bank accounts in the name of the estate, and if necessary, to try and liquidate assets, whether they be shares or movable property, so that they're not paying it out of their own back pocket. What traditionally used to happen is either they would have to pay it themselves and claim back from the estate, which was far from ideal, or they would go to one of the heirs and ask if they could get a debit order running off one of those heirs' accounts, which makes the final distribution more complex because they're having to offset admin expenses within the estate. And also traditional insurers would ask either for a debit order, which they couldn't sign, or for upfront premium for a full year, knowing full well that the estate may be wound up in a shorter period of time. So what we've done is try to address those issues. In terms of payment, we run estates generally on a quarterly basis. It can be a biannual or annual. Second of all, we make sure that the citation of the matter is properly set out. So you don't have, often we'd find that the deceased person was still listed as the insured, which legally obviously isn't possible. What you don't want is to be underwriting these matters at claim stage if that's the case. So we've simplified the application process as much as possible to take account of what information practitioners actually have at hand when they're appointed in these estates. It's obviously going to be far less than you or I will have on our personal businesses or personal insurance. They can't just run outside and quickly check the license disc on the vehicle. That vehicle's either sitting with an auctioneer or it's in the hands of an heir or insolvent. So we work with the limited detail that they will have on those assets until they get the full detail. We also found that one of the major issues, particularly with deceased estates, was that the properties would be left vacant, and traditional insurance policies simply wouldn't pay out if there were any claims for vandalism or theft on those properties. So depending on the type of trust or estate, we give, it's only limited cover unfortunately, but there's at least some cover in place for those trust estates in case there is vandalism or sort of petty theft that takes place. So depending on the type of estate, it's either 50,000 or 60,000, which we offer, and then liquidation estates will look at tailoring it on a state-by-state basis. A question we often asked with these estates is if there are general rates as there are with the bonds, and the answer to that is no. Each matter is written on an individual basis. We underwrite it properly to make sure that the rating is appropriate to the risk. So obviously a asset in a dodgy area is going to be rated far higher than your traditional areas. A thatched property is going to be rated differently to standard construction, etc. So that fits in with general underwriting principles that you'll find within the market. What we try and do if we're taking over a existing policy is to keep the terms as close to that policy as possible. Obviously, we're seeing within the general insurance market, and you'll all know that premiums are hardening generally, so we can't always match the premiums that were in place previously, but the majority of the time we are either able to, or if those premiums hadn't been assessed over time and they're inflated, we can even sometimes reduce the premiums depending on the risk that's presented to us that may now be static rather than far more active. The other thing that we found incredibly helpful is that we can use specialized Hollard and iTOO product offerings, which we can build in. So if our liability cover isn't sufficient, we're able to chat to the guys in our liability department and get them to add additional cover, and basically you still just dealing with ourselves and we literally fronting it on their behalf. The same thing with classic cars and art, etc., where it may have been complex for other insurers, particularly with estates that may have these. We're able to bring in Gordon and his team's expertise, but to front the product as well, so that you're dealing with just one division and one policy. I think I've been through the key differentiations. So Chris will move on to our client profile and who you should be looking at in terms of your brokerages, who you may even have on your books without knowing, and how to leverage off that.
So yes, thanks, Brett. So there's 4 types of clients that we look at. Attorneys. Most attorneys do the seized estates. They act as curators and as trustees on these special trusts. The same with accountants. They act as curators, trustees, liquidators, and fiduciary practitioners. What we do differently from most other companies is we will also issue a bond of security for an individual. That's not a professional. For as long as a professional, somebody like an accountant or an attorney, will assist them with the administration, either with an agent's agreement or a power of attorney. If we look at what is in the news at the moment, this type of product is very topical. SA Express went into provisional liquidation. Taste Holdings liquidated their food business. Edcon, Come, Mpumela Gaming and Leisure placed into business rescue. The total hospitality industry is in financial tatters. Media 24 closed some of their publications like Men's Health, Women's Health, Runner's World. Internationally, the Hertz Group filed for Chapter 11. Virgin Australia was placed under external administration. And all of these things obviously lead to massive amount of job losses. If we go one further and we go back to the asset forfeiting units, they talk about the cost of state capture hovering around 1.5 trillion. State capture has wiped out 1/3 of South Africa's 4.9 trillion gross domestic product. And that is where the curator bonds would come into play. What is the opportunity for brokers? First of all, cross-selling. You've got one client with multiple products. And you've got one client with multiple policies. An attorney that does deceased estates, if he focuses on deceased estates, is not just going to do one deceased estate in a year. He's going to do 50 or 60. If you've written that attorney and you've got him on your books, he's going to give you 50 different policies during that year. The wording is simple, very little advice. The rates are set by the master of the High Court, and it's standard across the industry. As I said, there's no complex wording. It's a one-pager for all the different products. And lastly, you've got experts by your side. We will assist you in writing this business. If you've got a client you're uncertain about going to the client on your own, come and talk to us. We'll go with you. We'll assist you in converting that client. As we said earlier, thank you very much. Brett is in Cape Town. I'm up here in Pretoria. You feel free to contact us at any time. And that's the end of our presentation.
Thanks, Brett and Chris. That was very interesting. I'm sure there's plenty of questions. I know we've got a few from some of our brokers here in the chat box. Maybe you guys can answer. From Christy Carr. Sorry, you open it up there?
Perfect. Yeah, just having a look here.
It's right at the top here. Hold on.
There we go. What are your feelings on exempting an executor from placing security? Yeah, Christy, good question. I think it's one of those questions where it's always a good idea until someone runs off with money. And I think generally you would like to think that you're appointing someone that you can trust, whether it be your attorney or accountant or financial advisor who's been historically advising you. And let's be honest, there should really be no need for a bond of security ever. People should be held to the highest standards from a fiduciary and trust point of view. But unfortunately, that's not the world we live in. In terms of freedom of testation, you're obviously able to decide on where your assets go and where you want them to go. You're also able to decide on who you appoint as your executor. So you would hope that you're appointing someone who's decent. We actually looked at a private product that we could offer to the market. So that's not just through the Master of the High Court, but that's on a normal estate. But the fact is that most people don't really see the need for it. They think that they're appointing someone that won't run off for the cash. So that's my general feeling on exempting people, is that you should be able to, and you'd like to think that you are, but unfortunately there have been some claims in the market. The last thing you want is to work your entire life to build up a body of assets only for a dishonest executor to run off with it. Moving on to the next question here, what are the vetting processes for curated bonds administrators? Like all of our product and applications, we look at these things on a case-by-case basis. Historically, there have actually been a few claims in the market, and I know when we approached reinsurers for the first time 8 years ago, they gave us far higher limits on the other lines of bonds. So we were getting, at that stage, 100 million rand on liquidation bonds, but they only wanted to give 5 million on curated bonds. There's the impression that the longer someone deals with cash, the more likely they are to steal it. And these bonds can carry on for 15 or 20 years, and the temptation is going to be there for a longer period of time. We see it quite differently in that we see someone either as being trustworthy or not. And we like to look at people with a track record where possible, or people with expertise. So the short answer to that question is that it's literally on a case-by-case basis. We prefer someone with experience and a track record, but we have looked at others. We've also looked at times, and I think we're the only ones in the market who do this, at family members who've been appointed as curators. So often that's been an issue for people, but we literally delve into what the story is. And often it's a spouse that has been financially supporting the person in any event for years, but the courts insisted that a curator is appointed, and nothing really changes. They still have the best interests of their incapacitated spouse at heart. So we try to see if we can sort of find the full story and then underwrite on that basis. It's not like we put it into a system and it spits out a yay or nay on a general matrix. Let's just see.
Got another question here, Brett,
Yes.
from John Kirby. Can some trust companies deal direct with the master and not take out the bond cover, or should they always use a broker?
Yeah, great question. So, John, there are 2 banks that deal directly with the master. We've got a global guarantee with the master. It's So Standard Trust and Net Trust have that. Their internal wordings are quite limited in what they can offer. So we find that even with those two, there are occasions where either they're acting as administrator without actually being appointed as executor, and they still require bonds of security, or that their internal limits are lower. So I think with each of them, they generally have a 5 million rand limit, and the bigger bonds still require an external service provider. So to answer your question, there are a couple, but it's very few in the market who are able to do that. Also remembering that the premium is paid from the proceeds of the trust, so it's an administrative cost. It's not actually a cost to that company, and that's why it's preferable for them to actually use an external service provider like ourselves.
Great, and then we've got one last question from Christy Carr. I think it's obviously a follow-up to the previous one. Where's the money paid to when the person who's supposed to be looking after the trust or estate, whatever it was, has run off with the money?
Perfect, yeah. So Chrissy, as I said earlier, the Master of the High Court is actually the chief custodian of all assets while they're under the administration, under the Master Administration. So they use practitioners, obviously, to either wind up or administer these estates on their behalf. But at the end of the day, they are still the chief custodian of those assets. And as you'll know, I know you're an attorney, they're a creature of statute. So this is an insurance in favor of the master to place the trust or estate back in the position that it was prior to the loss. So the money gets paid back into the estate, and the master will then appoint a new practitioner to administer going forward.
Brett, maybe I can just jump in there. The claim would be paid to the master as the beneficiary, and then the master would pay out the money back into the estate.
Okay, yeah.
Thanks, guys. If there are any more questions that you don't feel like typing out, feel free to turn your camera on or your mic on, and please do ask us questions. We find the questions and answer sessions after these presentations is where we do most of our learning. So please do feel free and don't be shy. Come and say hello and ask away if there are any questions.
And please also feel free to contact Chris or I directly at any stage. If there's anything that we didn't discuss that's bothering you and it comes to mind in a day or two's time, just pick up the phone and give us a shout. We're always happy to help and give advice. We want to empower you as much as we can in terms of giving your clients a good service.
I think that's it for the question, guys. Thank you very much to Brett and Chris. And I think if there are no more questions, the guys can say bye and they can turn on their mics and their cameras and just say bye to everybody.
And typical
Thanks a lot, guys.
Bye.
Thanks.
Cheers, guys.
Thank you very much. Thank you very much. Bye.
Thanks. Bye-bye.
Thanks,
everybody. Cheers. Bye.
Thank you.
Cheers, team.
Guys, thank you.
Bye.
Thanks. Cheers. Bye.
Thanks. Bye. Cheers.
Cheers. Bye.
Bye-bye.
Cheers. Bye.
Bye, guys.
Bye. Bye, everyone.